Hello, my dear friends. Welcome to the East-West Show. Jack Chow, the East-West with the G&E TV. Today, we're once again talking about Obamacare, the care we have now. And for quite some time, longer than a year and a half, longer than 2 years, we're talking about Obamacare being overturned, getting closer and closer and closer to the point that the Senate and the House with the version after version after versions, and then to finally be voted down. So Obamacare, well, looks like untouched, right? So we do not know what's going on, what shall go, what we shall do with the existing Obamacare. So today, in answering the questions, all the questions I have received from my friends over email, we have Coco Wang, healthcare specialist, founder and the CEO of Gold Honor, to be here with us. So welcome to the show.
Thank you, Jack, and thank you,
Very
everyone.
good. Every time I feel okay when you're here answering the questions I can't answer. And because we have been talking about the healthcare business for so many times,
Correct.
our audience are kind of getting into a habit that they want to send me the questions for me to ask you to put the question together for a show, something like that. Right? This is where we are today.
Correct.
And I would say that it is you yourself convinced my audiences with the trust.
Thank you very
Right?
much.
Something to celebrate with, right?
Thank you.
And you folks out there who wrote my emails asking questions, now here are the answers. So stay with us. Right? So first question, of course, that's a big question, a bigger question relating to the overall picture. After the failure after failure of the push to overturn, now where we are.
Okay.
So what is happening? What kind of picture we're looking at?
All right. So let's backtrack a little bit. So when Trump was on the administration, the Trump administration and the House of Republicans actually said they are vowing to repeal and change the Affordable Care Act, also known as the ACA. Now, as a result of that, so people like us, people like professionals, and people like the insurance company are expecting that they will give us a better plan, a more affordable plan, or something that's not government mandated to have government mandated insurance. Now, as a result, because they haven't come up with a new plan, even they passed a act called American Health Care Act, but there's no new law or new act or new health plan enforced. As a result, so we're going back to the ACA model of care. Because of this, there's a lot of discrepancies in the market and a lot of questioning from the customer. And also it creates a not so confident situation in the Trump administration.
All right, okay. All right, so basically we are where we are. I mean, we are where we were.
Correct.
All right?
Correct.
Okay, now, but the fact that most of the folks who wrote me the questions are concerned that would the Trump administration come back to reattack it?
Okay, so the answer to this question is it could usually happen because, as we know, the president, they're trying to make new changes, they're trying to make things better. And if this is a controversial topic, then they definitely will come back and attack it, because there are always people who support it and there are always people who against it. So we want to make sure that you are informed with all the updates and make sure that you know which side you want to be on.
Yeah. Given the fact that healthcare is one of the biggest, maybe the biggest industry in the whole nation, it is quite reasonable to worry that they will not give up. They will continue trying.
Yeah.
Right. In other words, politically, when they talk about the other issues, such as what is called SB 5, right? They make it a comeback and a comeback. What they do, they revise the version, revise the text, and so on and so forth, and change the title, and they come back. So, would the administration of Donald Trump do the same thing?
So to me personally, I think that will be a yes. To answer your question, I'll give out an example. So as we know, if you are enrolled with a government exchange program, that you receive government subsidy to get paid for your insurance in order to get lowered premium. You're in California, this market is called Cover California, right? So if you're purchasing insurance through Cover California, first of all, if you qualify, you get premium subsidy that reduce your monthly premium, helps you to make the insurance plan more affordable. Now, secondly, some of the plans have cost sharing reductions. That means if everybody's in the silver plan, they should be paying a certain amount of copay. Say, see doctor, I pay $45 per visit. But when you get the cost sharing reduction, number 2 of the subsidy in California, what you do is you pay less of that. You pay maybe $5. So initially, the government is also subsidizing your benefit, the $40 in between. Now, President Donald Trump actually made a change to the subsidy that the insurance company is receiving for the cost sharing reduction. Before, it was on an annual basis that the insurance company is receiving the subsidy from government.
All right.
However, now they change it to a month-to-month payment option, meaning I am the insurance company myself. I know this month I got my cost sharing reduction to be paid, reimbursed by the government, because the insurance company pays for it first, and then they expect the money come from federal government. But now it's a month-to-month basis and no future commitment, meaning maybe next month, if the administration did something, pass a new law, then I will be out of luck. I subsidize all my people, I don't get it reimbursed, and I will be at a loss.
I see.
So it's pretty critical.
It has caused so far the unstable kind of concern.
Correct.
Right, about the whole system. Right? So back to the very point though, when Obamacare emphasizes on the mandate, we know the whole thing is talking about, the whole thing is about a government subsidy versus the mandate.
Correct.
Mandate means everybody throws their minimum in, right? The 2% of the money. So when Trump care is gone, when Trump people is gone, suppose they're gone, right? Would Obamacare will still emphasize on the mandate?
It's pretty interesting to talk about this because earlier in the years when Trump administration was proposing their own laws or their own regulations, what happened is that the IRS actually announced something that they would take tax returns without having the health insurance coverage, because they're supposed to align. You have to mark, if you ask your CPA, they will ask for the proof of insurance, right? Without that, you will get penalized. But because of that was earlier in the year, I mean, then right now they haven't have a new law or new regulation about this. So the fact that whether it's mandated or not, it's yet unsure. However, we are proposing it's most likely gonna be mandated again, because if it's not mandated, healthy and younger generations, right? Healthy populations, they're like, I'm not using the insurance, then I will opt out of buying. I'm not contributing to the pool of money. Then the insurance company will be leaving at a pool of people who are using insurance a lot. They're paying a lot of claim for, and also they're maybe receiving government subsidy, so they don't receive as much premium from them. As a result, we are expecting a high increase in premium. If that's
not unable to self-sufficient, right?
Correct.
Okay, but thing is that we look at the Social Security request.
Correct.
File tax return. To show your insurance, to show you're covered, that's an enforcement. That's extra enforcement for the mandate.
Correct.
Now that the extra enforcement is gone, though, are we bringing the extra enforcement back?
So right now, they just announced that, IRS announced it, but they haven't had official law to pass it. Just like the American Health Care Act, the Trump administration was able to pass it, but they were not able to enforce it. So the fact that it's not called mandated, it's not yet enforced. So we're still back at the Obamacare era where the individual coverage is so-called mandated.
It is still mandated.
Still mandated.
In other words, the IRS efforts has never been confirmed.
Correct.
I see. Right, my dear friends, today with my friend Coco Wang, healthcare specialist, founder and CEO of Gold Honor, we got lots of questions and answers. Questions being those emails sent to me. They believe that I can put the questions together to put up a show to answer. So today, there's where we are. So let's take a short moment out. When we come back, we'll continue finding what we want to do with the existing care. Stay with us. Hello, my dear friends, my lovely audience, my dear fellow Californians. Welcome back to the show, the East-West Show with G&E TV. My name is Jack. Today joining me is my friend Coco Wang. She is a healthcare specialist, the founder and the CEO of Gold Honor. I believe you heard of Gold Honor. That's a big name everywhere. You go online, search about healthcare, Gold Honor pops up on the very top.
Thank you.
I did it myself. Okay, very good. So with that knowledge, don't be cheated by her face. So she looks like no older than this high schooler, but she's been in the business for quite some time.
11 years now.
11 years, oh my God, almost catches your age. Anyway, we're talking about with the fact that Trump Care tries, failed over and over again, finally failed. So confusions are caused.
Correct.
Right? Unstable worries, thinkings are caused.
Correct.
Instability are caused, right?
Correct.
Okay, now, and then whereas with the RAS push trying to lift off the ban of the healthcare mandate.
Correct.
So we're talking about number one is the healthcare insurance is mandated like Obamacare originally requested. The answer is yes.
Yes.
All right, now. And then the other big part during Trump time, when I say Trump time, I'm not saying Trump presidency. I'm talking about Trump's effort to overturn time.
Correct.
There's a big talk about the government mandate cutting.
Correct.
Right? So are they cutting or are they not cutting?
So far, what we have received from the resource that we have is that they're not cutting it as badly as Mr. Donald Trump has said they would. Because
in other words, they're still cutting.
They're still cutting, but not as badly as they stated they would.
But cutting is not a good word.
Correct. That's why usually it's offset by increase of premium, because insurance company is not charity organization.
Of course.
They're there to make business, to provide health service to our customers. As a result, what they do is if they're getting cut from the subsidy, from the fund from federal government, then they will be increasing the fund we as consumer are paying out of pocket.
Okay. Okay. So now they are cutting, but not cutting that seriously. So are they cutting to the extent of I mean, is the cutting still bearable or not?
The cutting, the number is not out yet, because what they are saying is that it's going to be based on the number of enrollee they have, and then what the actual data comes out during the open enrollment this year to show the subsidy going to have for next year. So that's why we encourage people stay informed, actually be shopping around, because you never know how much subsidy you can get throughout the program. And you always want to work with CPA to lower your taxes. More itemized deduction probably, and as a result, if your income is lowered based off of the deductions, then you will be better, most likely better, most qualified to receive higher subsidy in order to lower your premium.
In other words, when they are not exactly sure with the numbers of the cutting, we right now are not facing cutting already.
Not yet.
Not yet.
Not yet.
What would be the time span?
It will actually.
I mean, time frame.
Yes. So what happened is that this year is already set, because we have been enrolled in this year's plan since last year's open enrollment. So going back to open enrollment a little bit, the annual open enrollment for Obamacare is actually between November 1st to January 31st.
November 1st to January 31st
Yes.
for 3 months.
For 3 months.
November, December, and January,
Correct.
3 months.
Yeah.
Okay.
So let me explain more in detail.
Enrollment?
Yeah. So from November 1st to December 15th, 15th is being the cutoff line.
All right.
You can enroll, switch any company, switch into the different plan under the same company. It will be okay, and it will be effective first of the following month of the next year, which means January 1st. So if you switch between November 1st to December 15th, you are most likely having your new plan, new selection effective January 1st.
In other words, you have half a month. No.
1.5 months.
1.5 months.
Correct.
Left in blank.
Correct. You could those months is you still have your current coverages, but you're just making choice for next year.
I see. The new choice wouldn't start January 1.
Yeah.
I see. I see.
Yeah.
Okay. Now I want to clarify step by step.
Okay.
Number one, even though they are still talking about cutting, the cutting is not here yet.
Correct.
All right. And before that, understanding that November 1st till January 31st, we have a 3-month period of looking around to get a better minimum.
Correct.
Something like that. And for that, if you change before November 15th,
December 15th.
December 15th.
Correct.
Before December 15th, and your new plan won't start active till January 1st.
Correct.
And then for the rest of December, the 15 days, you are sticking to your old plan.
So basically what happened is, even though the enrollment period starts November 1st, but you're still staying in your original plan all the way until end of the year, December 31st. The period between November 1st, the open enrollment opens up, and December 15th, it's the cutoff line for plans to be effective, for the new plans.
I see.
The change or the new selection to be effective 1st of January next year. Now, if you're doing the changes, maybe you're out of the country, you can't do anything, and you come back after December 15th. Between December 15th to January 15th, if you make the selection, make any changes, the change or the selection will go effective February 1st.
I see, I see. In other words, the delay is caused by yourself. It has nothing to do with the system, nothing to do with the government.
Correct.
You just follow the trend, right?
Correct.
That's not something so painful to hear about. My next thing would be that when the government starts the cutting, which is not right now, sooner or later they're going to do it. That's a call to discourage the money resources from a minimum from this end. Do you think that's going to cost?
So definitely, because what we are hearing, especially on the Medi-Cal side, is that they have a budget shortage, meaning if they're already in excessive members in their budget, right? They couldn't afford as much member as before. They're reducing their benefit. So like a lot of times people say, I used to can get my dental take care of under Medicaid or Medi-Cal, but then now I have to pay out of my pocket, maybe 50% of that. So it's actually most likely, even though government is reducing the amount of subsidy, if they're not paying more than they should or more than they are paying right now, then most likely we'll have a reduction in benefit.
I see. But anyway, everything is will or shall, right?
Correct.
At this very moment, nothing actually on the table yet.
Correct.
Okay. We are sticking to the old plan.
Correct.
All right. My dear audiences, the more we talk, the more comfortable we feel that nothing serious shall happen during a short period of time, at least, that we can probably put ourselves back in the comfort zone to plan your own life. So today with me is my friend Coco Wang. She is a healthcare specialist, and she is also the founder and CEO of Gold Honor. Let's take a very short moment now. When we come back, we'll continue finding about the future of healthcare. Stay with us. Hello, my dear friends, my lovely audiences. Welcome back to the talk about healthcare. I would say that healthcare talk is one of the most important talk that you would have to care about.
Correct.
Because it's about number one, your own health, number two, your own pocket. It's a pocket versus a health stuff,
Correct.
right? Like today with me, my good friend, a healthcare specialist, Coco Wang, founder and the CEO of Gold Honor. Don't be, like I said, don't be cheated by her face.
Thank you.
She is much older than she looks. I'm kidding. And she has lots of experiences, I know, in this area. So welcome back to the show.
Thank you, Jack.
Okay, regardless of how they go with at the federal level, we Californians in California, we care about what we have, right?
Correct.
Okay. So what we have is called Covered California.
Correct.
So what happens with Covered California? Have we been affected or shall we be affected? So.
Yeah, so I actually brought a lot of statistics because I think it's good news and updates that we as the consumer and the public should know. So Covered California has served more than 3 million customers since it began the offering coverage back in 2014. And actually, California market, the medical insurance market itself, it's one of the biggest market in the nation. So Covered California has become the largest state exchange program where people go on and receive subsidy to pay for the premium or the benefit. Now, actually, California is doing a pretty good job through Covered California to get people get insurance or make it more affordable to get insurance, because the rate of uninsured is dropping in California much faster than the average of the nation.
Oh.
Yeah. So the sources from Center of Disease Control in the U.S. In 2012, in California, the uninsured percentage averaged about 17.2%. So in 100 people, there will be 17 people who are uninsured, no insurance.
Okay,
right?
okay.
But in the U.S., it was only 14.7. So we're actually higher than the nation average.
You see, in the sense of uncovered.
Uncovered, yes.
Now, we still got a long way to go.
Correct. So the Covered California started in 2014, 2 years after that, and then goes on to since last year, right? So the data from last year only covered 2016, but it showed California itself dropped to 7.1% uninsured. So the 17 people in 100 people that have no insurance, 10 of them got insurance. Only the 7 people who are left behind.
Oh, yeah. In other words, compared to the national average, we're way ahead.
Correct.
I see.
Yeah.
I see.
And good news is that the U.S. average, the national average in 2016, is actually 9%. So we're actually now lower than the national
Lower than
average.
9.
Correct.
Okay.
So that's very important to know that Covered California is actually getting people covered.
That's a proven fact that Covered California is working.
Correct. Correct. So that's very good news. I know there's a lot of people who have negative experience with Covered California or who may not had a very good time with the plan, with the co-payment, with the premium especially. But actually, looking at the big picture, California itself, we're getting more people affordable care.
Given the fact that it is, after all, government money and premium money, right? So the more participants, the more money.
Correct.
Am I right?
Correct.
So now, someday, somehow, till everybody goes in, till the percentage goes to, say, 0%, everybody is in. So are we, in that case, expect a premium going down?
So if that's the case, yes, definitely, because the people who are currently opting out, the 7% who are uninsured, most likely they're no longer the population who are not able to afford insurance. Because as we know, if you are poor, disadvantaged, or you're just at a very bad health situation, you are not being declined because you have a bad health or a medical record or pre-existing condition, we call it. And you're not getting declined because you can't afford it, because now we have subsidy to pay for you. If you're eligible enough, you can even get 0 premium, 0 copay plan like Medi-Cal. right? So most likely this population is the healthy population, the healthy people who either are thinking they
you're right.
they don't even go to see the doctor. They'd rather pay the penalty than paying the premium itself.
The smaller the number, the better the health
Correct.
that they represent, right?
Correct.
Because since I think I'm healthy, I can gamble.
Correct.
Like that kind of thing, right?
Yes.
When these people are in, we're expecting a situation, say, the insurance says, according to my last year book balance, I found out we do not need that kind of money, so let's reduce the premium.
Correct.
So that could be something to be expected.
Yes, and actually I will share something with you as well. I think the 7% who are currently uninsured, most likely they're very young generations, so the people who doesn't get sick, like the people in their 20s and 30s, making about an average, maybe above average income, but they don't have a budget for health insurance premium. They don't see a use in that, right? They're saving up for something better, or housing or something, right?
I see.
And then second population inside this pool is most likely the people who are very much between Medicare and their 50s, because those people, if they're making the income that does not qualify them for subsidy, they are getting fully premium. They have to pay themselves, meaning that's about $500 to $1,200 a month, meaning that's very, very high. And if they're in a good health, they definitely don't want to pay for the premium. That's so high. Correct.
So in those are the folks that are supposed to back off.
Correct. So if those people join the population of insurance people, then we're definitely looking at more contributed budgeting for everyone in the pool. And also better health people with better health who are healthier, they can actually even out the number of expenses from the insurance company.
So after all, it's only a market operation, right?
Correct.
So when the government make it a mandate, you have to buy anyway, right? Now, next thing is that if your price remains reasonable, when they are healthy or not healthy, when they are made by law to buy though, they would go for you because you're supposed to be most reasonable.
Correct.
Right? Anyway, so the future is not that well, it's very optimistic, isn't it?
I think it's a very optimistic thing myself, because I see the people, generally speaking, people who were maybe declined coverage. Like I had a client who had open heart surgery. Because he had open heart surgery before he immigrated here, then after he gets here, he cannot buy any insurance. That was before. And now he can get fully, subsidized insurance. It's pretty much affordable. That will allow him to go to really top specialists like UCLA, USC, those research hospitals that will help with evening out his condition. So I think that's very optimistic in the long run.
I see. So those are very, very rare cases. According to, general Americans, general Californians, I believe the care will work.
Correct.
Right? Okay, that's good news. At least, until last, we have some good news to provide that our covered California plan is the plan not only proved to be working, a plan that has a future meaning that our premium would be relatively down. Reasonable. All right, stay with us. We'll be right back, please. Hello, my dear friends, my lovely audiences. Welcome back to the talk about healthcare. Finally, we have some good news to tell you that Obamacare remains. The covered California, our plan has intact. Right?
Correct.
So now, with my good friend Coco Wang, a healthcare specialist, founder and CEO of Gold Honor. Gold Honor is a big company that you search online for healthcare. Gold Honor pops up very first. It's a big company, and I myself go by, and she handles everybody, my whole family. So good work.
Thank you,
I'm
Jack.
satisfied. Okay,
Thank
very
you.
good. Yes, I understand. With the good news, also you have some advices.
Correct.
and some suggestions
Correct.
about a covered California,
Correct.
which is part of Obamacare.
Correct.
Right? So go ahead, please.
Yeah.
We're ready for you. We trust the source of information.
Okay, so
right.
let's talk about deadlines.
Uh-huh.
Deadlines very important. You know, if you're applying for some sort of position, you definitely don't want to miss the deadline.
Mm-hmm.
So as I mentioned before, we have an open enrollment where you can openly select, change plans or change carriers, change insurance company for your own medical insurance. So that
including changing doctors?
changing doctors you can do every month.
I see.
Yes,
Oh,
you can do every month.
I see.
Yeah. So this period is called open enrollment. It's from November 1st to January 31st. It's about 3 months. And make sure you just are aware of, if you make the changes before the 15th of the month, most likely it's gonna go effective 1st of the following month. So if you make changes by December 15th, the new plan or the change will be effective January 1st. Yeah. Now, same rule applies until end of January 1st. So if you apply between 15th of January and the 31st of January, the new plan will actually go into effective March 1st.
In other words, your advice is number one will be that if folks back there are planning for a plan change,
Correct.
or whatever change, right? You recommend them to better start early, sooner rather than later.
Yes.
The sooner the better.
Correct. The reason why I asked that is because Consumer Report, their foundation, actually did a study on the average people who are paying for their insurance. The people actually take time to shop around, to compare, are actually not facing as much of the increase as the average population. So meaning even maybe average we're increasing about 12% in premium, but if I take the time, I shop around, I compare, I did my work, I'm actually maybe facing about 10%. So generally lower than the average.
In my case, I believe I have the best plan you provided me. I don't even have to look around, am I?
So
or you still recommend me to look around for challenge?
I think I'm confident enough to say I am
the
best option for you.
So
yes.
I don't have to waste my time to do so.
Correct.
But provided I do want to go look around though, so I better do it as early as possible.
Correct, because time is limited and time goes by very fast. You know, we talk about this. I spent a lot of time studying this before I was able to digest it and let you know about the basics. So if you're doing it yourself, you might pulling your hair out. We want to make sure you have a good understanding before you make any decision. So yeah. So during this period of time, we and many other agents or Cover California enrollment centers will host seminars, well, in different language as well, to help the consumers to make a choice. So I think that's something definitely we want to stay tuned because that will help you make the correct decision with the sufficient information.
I see. Yeah. Very good, very good. So in my case, if I, after looking around, saying that I saw nothing better, I want to stay, do I need to notify you for next year I want to stay, or just say nothing?
So there's two ways usually to do this. You can just don't do anything, and but one thing I do have to mention is that even though maybe you're paying $300 for your insurance right now, next year the premium is going to be different. The benefit is going to change. So even though you may
positively or negatively?
Positively and negatively. Most likely the premium will go up because as we age, so like an 18-year-old and a 27-year-old, the 27-year-old premium is gonna be higher than the 18-year-old because one more year, we're 1 year older, so the premium is going up a little bit, and also because the rate increase. And second of all, the benefit changes, maybe copay, some parts are lowered, some parts are higher. So you have to really decide if this is the actual plan you want, knowing next year's benefit.
And subsidy-wise, is anything going to cope along with the change?
Yeah, subsidy-wise, it's actually good news for everyone. So before, so let me back up to the subsidy model again. So we have a thing called federal poverty level. That's the national average that they determine for subsidy. If you're under 138% of that, you're under Medi-Cal, fully subsidized, no premium, no co-payment. If you're between 138% and 250%, you are not only getting subsidized and also receiving the cost sharing reduction, which is the lowered co-pay.
I never get a the precise number for the poverty line. It is just a blur line in my mind. Never realized with a number, right? So do you or do they in the business have a description of certain dollar amount as income to consider as a poverty below or above?
Actually, people like our office, we actually make a table out of it to show the clients, what would be under, and we actually put it in Chinese.
I see.
So that our bilingual clients can understand it. But this is also available on Cover California. However, next year's is not yet ready. So I think it will be ready as soon as October.
It has the income level and how you want to benefit from.
Correct.
And how much, and versus your household size, right?
Correct. So that's very important. And actually, compared to this year, next year's the level are generally higher by a little bit. So meaning if you're this year, maybe you're receiving only $50 in subsidy to pay your premium. Even though your income doesn't change, your household size stay the same, but next year you may be receiving $80 because the subsidy moved up. They're looking at higher income to compensate for inflation as well.
All right, very good. Thank you very much. What else recommendation or advices you have?
Well, another recommendation I have is definitely find someone who specializes in this business. Whether it's me or it is someone else, it has to speak your language because you have to fully understand this. They have to be professional enough to give you updates. Like we give out monthly emails or sometimes mailer to clients. And also you have to remember, they have to be agents who can help you compare different options. Because there are some agents who can only, maybe I'm only with Blue Cross. I can only do Blue Cross. Whatever I say, Blue Cross is the best. But people who are independent agents, they were able to compare all the companies that offers the plan to you. Then definitely you are at a much greater choices and your vision will be widened.
Okay, very good, very good. And what else we should know about Cover California? Now the summer is over. We're looking at almost towards the end of the year, except on planning healthcare or health items. What else do you want to recommend us to do?
Okay, so there's two carriers I do want to mention inside Cover California. Anthem Blue Cross is known as the oldest insurance in California. Blue Cross coming next year, they're actually quitting the Cover California market. So people, they're average about 17%. So people who are in this 17% pool who have currently with insurance with Anthem Blue Cross, you will have to check if your plan is continuing. If not, then you have to choose other carriers. So people who have Anthem Blue Cross, you should really be watching out in your mails because they will be coming to inform you whether you can stay or you have to change or there's option. And contact your agent if you have any questions.
Okay, all right. Anyway, so I don't have to. I ask you. All right. Okay.
Thank you.
Anyway, my last question. How come no system recognizes dental care?
Okay, so that's a very tough one.
And to everybody, if you go around, you ask everybody, dental health is one of the most important health. Without a good set of teeth, your health is no way to go.
Correct.
Right? So how come? And the next question is that what do people do? Can they bring some kind of a dental care to them?
So what I would suggest is that dental insurance, like most people who think about, it's very different from medical insurance. They actually, so medical insurance, they give you a maximum that you have to pay. So maybe your medical expense is like 1 million, but you only have to pay 4,000. That's your maximum in a year. Anything after that you incur, you don't pay anymore. But dental insurance is very different. They only give you a set amount of allowance, meaning they set a standard of $2,000. Anything that you accumulated over $2,000, it's all on you now. So the benefit package is very different. And also dental care can get very, very, very expensive.
Yeah, of course. We know the whole healthcare business is very expensive.
Correct.
However, suppose if the nation promotes something like Care California, right? And this Care California specialize themselves in dental care. Well, people with or without dental problems put their premiums and the government says subsidies, we have another system built. Why can't we do that?
So actually in Cover California right now, after you choose your medical plan, you can go in and choose dental and vision. Just those don't have any subsidies. So maybe you're receiving the most subsidy, the plan with the most subsidy, but once you go down with